I am Reed, I am 27, just an average dude. I've made tons of money mistakes in my 20s, and now I want to share everything I've learned to help you take control of your finances and your life. Oh shit, where do I even begin with this market? It's been a roller coaster, to say the least. So, I wanted to chat about some moves I've been making and what I am looking at next. It is funny, a few years ago, I was just blowing through my paycheck, had some debt, no real plan, just living that typical young and dumb life, but then I realized, man, my 20s are where I build the foundation for everything. So, I started learning about money, got my spending in check, paid off those small debts. And now I am all about steady savings and smart, low-risk investments. I am no rich guy, no financial expert, just a dude who has been there, screwed up, and learned a few things. All right, so let's dive in. I actually took some profits recently, and I am seriously considering buying into a new position. Now, I did already buy more SoFi. Why SoFi, you ask? Well, if Anthony Noto, the CEO, is out there buying Leaps, then one, maybe I should be looking at Leaps too. And two, I can definitely start by just buying more shares, which is exactly what I did today. Gotta follow the smart money, right? Then they're Micron, man. Micron has been a wild ride for me. I am talking about a company that now in the $1 trillion club. It was a 10 times return for me, a truly amazing run. So I decided to take some profits off the table, about 50% of what was left of that position. Actually, why? Honestly, I am just super happy with the returns. You gotta know when to lock in those gains. It is not about being greedy. It is about being smart. I'll explain all the rest of my reasoning in a bit, but for now, I am chilling with those Micron profits. I also took around 56% of profit from AMD. AMD is sitting at $53 a share right now. Can it go higher? Absolutely, which is why I am still exposed to that name. But again, taking some profits felt like the right move for me. I mean, nobody ever went broke taking profits. That is something I learned the hard way, trust me. I used to hold on to things way too long, hoping for just a little bit more, and then watch those gains evaporate. Not anymore. Now, we've been talking about some other companies out there, the likes of Shopify, Axon, and Reddit. These are companies I don't currently own, but they've been on my radar for a while. They haven't really participated in this recent bull run, but their businesses have been doing incredibly well. As of right now, I haven't added to any of these names, but I am looking at them very closely. You can find the DCF models for Shopify, Axon, and Reddit for free on my Google Drive. The link is always down in the description below. I'll actually show you the Reddit one in this video because we already covered Shopify and Axon in another one. It is like DJ Khaled would say. Another one, it is just so true though. Another one because the market keeps giving us opportunities. Despite all this talk about momentum deal or no deal and all that market noise, there is still a lot of red and a lot of green out there. The green, as usual, comes from the usual suspects. AMD was up 7.7%. Micron was up close to 20% today. Clack up 6.5%. Texas Instruments 5%. GE up 3.8%. SanDisk 7.5%. SanDisk is now a $235 billion company. So, yeah, the usual suspects are going up, but guess what? Nvidia, the darling of the market, could even catch a break today. Nvidia was still down 2.2%. It's kind of ironic, right? Nvidia, the company that basically enables this whole AI ecosystem, you could argue, isn't participating in all this upward movement? Now, some people might say, yeah, okay, but Nvidia is a $5.2 trillion company. Hello, it can go up every single day. And fair enough, I get that. But it is not like it is trading at 50 times sales or 50 times earnings, not even close. And by the way, Micron, a $1 trillion company, just went up 19%. So Nvidia is currently worth 5 times Micron, and it could catch a break. Actually, it is even more than that, as you can see. Before we get too deep into that, let me show you what I actually did. I sold 24 shares, 50% of the position that was left of my Micron position. That was an 880% gain. Man. Selling 50% of what is left, it has been an amazing ride, but I am good. It is in the $1 trillion club. Now, could it go higher? Yeah, sure it could, but I honestly don't care at this point. Whatever it does from here is great. If it goes higher, I'll still benefit from my remaining shares. And I'll probably close out the rest of the position if we go above $1,000 or so. Honestly, I just feel more relaxed having that cash, or putting it into another name where I don't have to constantly think about, oh, will the hyperscalers increase or decrease CapEx? What is going to happen with memory? Will software make memory cheaper, or will there be less demand? All those questions, because remember, we recurrently experiencing this thing where if the cost of something decreases by half, then the demand increases by more than half. We saw that happen with tokens, for example. Now, with memory, the whole thesis behind me buying Micron over a year ago was because HBM, high bandwidth memory, is not a commodity, or at least not yet. But then again, They are also working on custom HBM for the future for many, many years. Memory was seen as a commodity, so of course these companies didn't get a huge multiple, right? Micron, SanDisk, SK Hynix, all of them. But right now with HBM, there is just so much demand. There aren't that many players that can make these things, and that means more demand. Not enough supply, prices go up. Insane margins. Okay, but what happens when these companies, all the hyperscalers, all of NVIDIA, etc., figure out a way through software to use their existing memory capacity more efficiently, and maybe use it even more than what was expected? Well, maybe then there will be less demand for HBM, which I don't think will happen, or the cost of HBM comes down. If the cost of HBM comes down, yes, you can still increase your revenue, but your margins are going to peak pretty soon, which means, again, the cost will come down, but the demand will increase. I don't think there will be less demand for memory a year, 2, 3, 4 years down the line, because more and more apps, more and more products will pop up thanks to AI. You are going to need more memory, but the cost of it is going to come down, which means margins are naturally also going to come down. By how much and when? I don't know, but in the meantime, let us focus on what has been happening year to date. IV put Microsoft, Google, Amazon, Meta, the QS, and the SP here. What can you see right here? You can see that only 2 names, Google and Amazon, are beating the QS and the SP, right? Because the QS are up 17%, SP 9.1%. That is it. And I am talking here about the hyperscalers and the big tech company that is Meta, technically speaking. If Zuck decides 2 quarters down the line to say, actually, we've reached an agreement with, I don't know, Anthropic or whatever to license compute, poof, this thing goes to the moon as you might have expected. But you can look at this. Meta down 6.2%, Microsoft down 12.1% year to date. That is not all. Let us have a look at the semiconductor names, shall we? Memory as well. Here we have one name, Intel, up 204% year to date. Then we have Micron, 138% year to date. Then we have AMD, 109%. What do we see here? The QS again, up 17%, and the SP 9.1%, with NVIDIA being up just 14%. Look at how much NVIDIA is trailing these other names and barely catching up with the QS for this year. It is ridiculous. Moving on to the neoclouds, we have Nebus here at number 1, 138.8% up year to date. White Fiber up 79.4%. Applied Digital 63.2%. And then we got here some of the rest, 33.6%, 31.1% for Iron and Core. So they are outperforming the QS and the SP. They definitely outperforming NVIDIA, definitely outperforming a lot of the hyperscalers, big tech companies as well. Why do I mention this? Well, I mention this because a lot of people probably own NVIDIA. I know a lot of people own NVIDIA, not just this year. They've been owning it for many, many years. But I see the sentiment around an NVIDIA, Meta, and Microsoft like, oh, this doesn't make any sense. Why are these stocks not going up? I should be chasing the other ones, right? I see a lot of people trying now to chase what they've missed out on, trying to chase these names, these high-flying names. And of course, nobody wants to look at these names right here. Nobody wants to look at the names that are beaten down. If you look at Axon, that is down 31.5%. If you look at Reddit, 41.4%. Look at Shop, 34.5% year. Date only. And as you know, the list goes on and on and on. Whether it is Salesforce, Adobe, ServiceNow, you name it, some cybersecurity names. We were going to have a quick look at Zscaler later on, but nobody wants to look at these names yet. Many want to look at the names that are up significantly. Now, on the one hand, you can say it makes sense. You follow the momentum, right? Why not? You follow the momentum. Why would you go against the market? And you know what? I would agree with you in the short term. In the short term, yes, I would agree with you. Why go against the market? And IV said it before. IV made this mistake before. But yeah, you adapt, and you are like, okay, you know what? The market hates these names. And by the way, a lot of these names, a lot of these software names, yes, they are down quite a lot year to date from the 52-week highs, the last 12 months, 3 years, whatever. That is true. But don't forget that a lot of these names were also getting a high multiple. They were getting a high multiple. And so just because they redown 30, 40, 50, 60% or so from their all-time highs does not make it an automatic buy. A lot of these names, yes, are becoming very cheap, are becoming undervalued, but a lot of these names were also trading at a higher multiple right now. The market still, if you don't know why this is happening, it is happening because not the SaaS apocalypse. Oh, cool name. No, it is happening because they had a business model. And maybe with AI, the business model has to change. And so maybe margins are not going to be super high as before. Maybe the new business model will have lower margins. That is the problem right now. The market just doesn't know. If they don't know, they shoot first and ask questions later. But that said, this also provides long-term investors great opportunities to buy into great companies that were always trading at an expensive valuation and have gotten either cheap or less expensive, which opens the door for us to accumulate more shares. In my case, yes, it is looking at an Axon, a Reddit, and a Shopify. Now, before I continue, you know what to do. Hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now. Or go to full.com/coochinvestor. Thank you very much. And also a special thanks here to Fiscal AI, great partner of the channel if you haven't tried it out. Everything that you are going to see right now in the video and in all of the videos comes and is being powered by this platform. If you want to try it out, there is a link in the description and in the pinned comment. You get 15% off and new users get Fiscal Pro for free for the first 2 weeks. So numero uno is Axon. Axon basically almost doubled over the past 3 years, but over the past year, it is down 48.1% and year to date, 31.3%. Why is that? Is the business not growing? Is it not a good business? No, it just was a very, very expensive business. It still is an expensive business to own. It is a $319 billion business, but it is one that is, of course, growing very rapidly. How are they growing? Well, they've got 2 segments. Connected devices revenue, that is growing 32.8% year over year. As of last quarter, software and services close to 35% year over year growth. Devices as a percent of the whole revenue is 56%, whereas software sits closer to 43.91%. I do expect that part to actually become a bigger chunk, which means also higher margins. Future contracted bookings also increasing quite nicely, 44.4% to $14.3 billion. If you look at net revenue retention, that continues to go up 125%. Then looking at revenue over the last 12 months, revenue has increased by 34%. It is expected to grow by 31.5% this year, 29.2% next fiscal year. And then a small acceleration, 29.64% in fiscal 28. Still a very, very fast-growing company that, in my opinion, has sort of a monopoly. Now, a company that does not have a monopoly, that is Ferrari. This is the new Ferrari, the EV1 Ferrari low. Does it make sense? No, it does not. It is absolutely hideous. Stock is down 4.83%. Should have been down way more than that. I don't know what the heck this is. This, of course, is being designed by Jony Ive, right? The guy that worked at Apple, that OpenAI acquired his startup for around $6.5 billion. Well, okay. I don't know what this is. This is the 8th wonder of hell. This is terrible, terrible stuff. Going back to Axon, as you can see, Axon on a weekly chart has been trading at or around the 200-day moving average, which sits around $390 per S-hair. Now, again, this is not a company that is cheap, as you will see in the DCF. It is not cheap. It is just less expensive. Now, it is undervalued if you are purely looking at the bull case. The base case, it would need to fall a little bit more, which you can see right here. Bull case, 41% upside. Base case sits at $300, so 22.6%. Downside bear case is really when nothing makes any sense. But if you look at the probability weighted one, it is 18.8% downside here. So yeah, it is one where it is less expensive. It is not cheap, although it is a very, very good business. Moving on to the next one, and that is Reddit. Reddit year to date is down 40.2%, but over the past 12 months, it is still up 38.3%. It is a company worth around $27.85 billion, and it is growing very, very quickly. Of course, Reddit over the past couple of months, despite good results, the stock gets hit. Why is that? Well, AI, it has no semiconductors, no memory to sell, and so it does matter. It does matter that the business is growing. Well, as you can see right here, very quickly, if you look at the total revenue and what is expected over the next coming years, this is basically it. 46.5% growth is expected for this fiscal year, then 31.5%, and then 25.46% in fiscal year 28. So, still rapid growth. If we then go and look at free cash flow, for example, free cash flow is expected to explode this fiscal year by 76.6%, then 36%, and then another 29.62% in fiscal 28 to reach around $2.1 billion. So again, a fast-growing company. If you want to look at the quarterly results for some of their segments here, of course, with Reddit, you have to think about, okay, advertising budgets, licensing deals for AI companies, right? Because I do think that the forums on Reddit, some of them are completely ridiculous, some kind of Black Mirror episode things.